Hey everybody, John Murphy, CSSI. Let's talk some cost segregation now that the tax day is done and we're all catching our breath a little bit. It was a wild one, but I wanted to talk through some things as I talk to owners all the time on a regular basis. They've got buildings that they've owned for a few years, some of them for a number of years, and they'll ask me a question: can they go back and do cost segregation on a building that they've owned for quite a while, and do they need to amend their returns? They absolutely can go back and take a look at doing cost segregation on those buildings. Typically what I find is, if you've owned the building maybe for 10 or 12 years, it probably doesn't make sense. However, the caveat being, we should still take a look at that depreciation schedule, because there might be some improvements that were on the schedule or that are on the schedule that maybe could be accelerated. So they might be classified as a long life when maybe they could be getting a shorter life. So we would want to take a look at that. I've got a number of examples where we've studied buildings that are the owners had for many years, and we're still able to accelerate property and make it worth their while to do the cost segregation study. And they don't have to amend their tax returns. We don't ever recommend that you amend your tax return unless your CPA says you have to do it. You might have some other kind of extenuating circumstance going on. But normally what can happen is that if you've got a building, maybe you've owned it for 2, 3, 4, 5 years, 6 years, whatever, you want to study it for cost segregation, we can then draft the 3115 for you and do the 41A calculation, and then your CPA would then apply that to your tax return, and then it would just get caught up on the current year's taxes. So for example, if you bought a building back in 2019 and now you're looking at 2026 and you need some deductions, you can do the cost segregation on that building, apply it by using a 3115 form, and apply it to your 2026 taxes. It's relatively painless, costs a little bit more money to get that done, but it's pretty nominal. Anyway, you can take a look at that. If you own a building that you've had for a number of years and you have not done cost segregation on the property, we'd be happy to take a look at that. My name is John Murphy. I represent a firm called CSSI. Work all over the United States helping building owners save money on their income taxes by doing cost segregation on their building. You can find me on my blog at costsegbuilding.com. Find me on LinkedIn or check out our new calculator. Go to costsegcalc.com. Plug in your asset details and find out what you can save on your taxes by doing cost segregation on your building. Take care.